This then is the bare bones of the M2 strategy. This is the Euro USD in a recent move. Price was clearly in an uptrend and price had come up to a previous area of support and resistance. You can see here how price has slammed into this resistance area, failed to break and bounced along. And if we go back to earlier in the year, and you can see in May time here it was major resistance and here it was major support. So it is an important area. What we're looking for is price to break and close above this area of resistance. And therefore this candle here broke, closed above on a 4-hour chart, and then 4 or 5 candles later this candle came back down and tested this area again. Now, on this occasion this worked to the pip. This came down and touched this line to the pip. However, I always place my entries 10 pips above if we're going long and 10 pips below if we're looking for a short. And the reason is price does not always come back exactly to the line, and you also have to allow for spreads. And so for example, if your spread on the Euro USD is say 2 pips and it comes down to the line, you will miss your entry by 2 pips. So the rules are, you look for a break and a close of a major area of resistance or support, and you are then looking for a following candle to come down to the area plus or minus 10 pips. On this occasion this worked for a few hundred pips, and obviously it was a textbook example. This is the Aussie dollar versus the US dollar. Very similar setup. We are in an uptrend. Price has come up to a major area of previous support and resistance. It's just below a whole number. And you will see as you start to trade more that price does react strongly around these areas. Similar scenario, we've had major resistance and price has come back up and hit it. Finally, we have a candle that has broken and closed above. And this is a good example of where the candle did not quite get back down to the line. And therefore, had you placed your entry exactly on the line, you would have missed this 200 or 300 pip move. Therefore, candle to close, the very next candle to come back down within 10 pips, we take the long. And this is a British pound versus the dollar on a 4-hour chart. And I'm going to show you quite a number of examples on here. Here you have previous resistance, as you can see looking back here, and it does go back further in the year. So we have a major line in the sand. And once again you can see price, the candle came up, closed above it, the all important close. Very next candle, once again, this did come back and touch the line and then moved away hundreds of pips. And this happened on numerous occasions on this pair in recent moves. The next area of support and resistance we're looking at is just around 5,900. And again, if we go back to the left, you can see how this was an area of previous major support back in May. Therefore, we are looking once again for a break and a close above this area. This is the area. I'm just going to zoom out for you, and you can see we have the candle closes. Now this goes on for over a day in the 24-hour period of time that price kept coming back down. But as you know from earlier lessons, major previous resistance becomes major support, and therefore all the way along this line finally price moves away. Where do we stop next? Well, if we have a look around here, just above 160,100. Now on this occasion, price did not pull back. It simply kept going and we would have missed this trade. It's frustrating. It happens. MoveOn.com, just get over it. At the moment, price has stalled around 62.60 area. And if we were looking for a move further along, we would look over to the left. Now this gives me concern. This was the first time in a year, it was August the previous year, when price had been up around 163.00. And what did price do? We'd had a reversal candle at the top of this major move, and price then went and fell away. Therefore, on this occasion, and this is very important as well because this is 6,300, 163.00, a reversal candle, and therefore in its current position, I will wait for price to break and close above 163.00 because Past experience tells me in this area before, price fell away hundreds and hundreds of pips. This is USD versus the CAD. Recent move. This is on the chart with all the EMAs on. You can see the price is below the EMAs. The dollar CAD has actually been in a downtrend for years. What had happened here? Price came down. It slammed into this area of support. Price broke through, and it was maybe 10 candles later before price started to struggle at this area again. But support becomes resistance. That was a valid trade. There are variations on this. This is the Euro USD, and you have here 124.30 was previous support and resistance. We also have the intersection of a 55 EMA, and you can take M2 trades from breaks of major EMAs. So for example, in this case, we had the benefit of both. We have a break and a close above 124.30, and it's also a break and close above the 55 EMA, which has not been broken for months. It was in a downtrend, it's starting to roll back over. That was a perfect example of an M2 trade. Similarly, when you get up here, we have a break and close above the 200 EMA. Once again, we have been in a clear downtrend. Remember, this is a daily chart. Price is starting to roll over, break and close above, pull back to the area, decent move up. At the same time, we had the similar scenario in the opposite direction for the Swissy. So for the Swissy here, we were in a downtrend. Price had bounced off previous support and resistance here, finally came back down. It broke and closed below the 55 EMA, which was rolling over, and this major physical horizontal support and resistance. Very next candle came up, on this occasion touched it to the pip, and price has moved away now 300 plus pips. Similarly, price came down and broke and closed below this daily 200 EMA. A couple of candles later, price comes back to test the area and price moves away. It's not always straightforward, and it's not always clean. This is the Euro GBP. 80 was a huge line in the sand for this pair, and for a number of days, almost a week, price was bouncing off this area of resistance. We had some minor breaks here, and I was saying to members the best thing would be to wait for a break and close above 80.20 because this was all so messy. Eventually, price did move away. This is the dollar yen, and throughout the summer, price has not been in a trend, it has been in a range. And what that means, price has been coming up to an area, back down, bouncing off on multiple occasions, back up, back down. But this was a major, huge area of support. It is a whole number, and on every occasion throughout the summer when price has hit this line, it has bounced away. Therefore, last week we had a break below 7,800, highly significant. The very next candle came up within a few pips, and you place your entry 10 pips below, you would have caught this move. This then is the basic premise of the M2 method. We are looking for breaks of major support and resistance with a pullback when price comes back to test the area with a view to a continuation move.